You have landed on Island Money 365. I am your host, Tamara Brown. Welcome, 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 welcome. Welcome to the studio. We have with us on Island Money 365 today, Tamara Brown. Yay! No relations that we know, but you never know. You never know. Gotta ask my grandma to go trace those lineage. She's one who knows everything. When she goes tomorrow, I don't know what's gonna happen. But welcome to the studio. I'm so glad to have you.
Thank you. Welcome.
I'm so happy to have you in the studio with that. So, Tamara knows taxes. Why? Why in the world are you doing taxes? And whenever we hear word taxes, I'm like, ugh, taxes. So, come on, how you got into this world?
So, just like my mother says, somebody got to do it. So, it was basically, she always did taxes. That's what I know her doing every tax season. She was like the old school where you seen calculators and receipts all over the table during tax season. And, she got older and she was like, somebody in the family has to learn how to do taxes. And it just basically became me. I inherited the business. I took the training, and this is, history in the making. Tamara knows taxes, so that's how I got into it.
So I love the name. Can you tell me a little history behind the name?
Oh, so the name is nothing special. I'm always trying to find catchy things for people to remember. I do have a writer's background, so I published books back in the day. So I was trying to find something that somebody could remember. I wanted people to remember me. There's so many people doing taxes and doing financial advice. So I just said Tamara knows taxes. I don't know if you're from the 80s or 90s, early 90s. There used to be football player Bo Jackson. And he had a commercial and it was like, Bo knows this and Bo knows that. So I kind of just played on the words and came up with Tamara knows taxes. So it actually works. People will see me and I say, hey, nice to meet you. I'm Tamara. And they go, knows taxes. And I'm like, it's catching on. So there we go.
I love it. All right. So let's jump right in. What should we be doing, honestly? Because every tax season, people are making the dashes. Oh, we gotta get this together. We should be getting that together. What should we be doing year round to make sure we are not doing the crazy dash to get things together come tax time?
For year round, you should just make sure you just stay on top of things. If you're a business owner, you should be doing monthly bookkeeping. So you should be keeping track of all your income and your expenses that you have throughout the business. And I do highly recommend you using accounting software. But everybody in general, I feel like at the beginning of the year, you should be estimating the amount of taxes that you're going to owe for the next tax season. If you know the amount of income that you're going to make for the year, the IRS actually has a withholding calculator. You can go on there and estimate the amount of taxes that you'll owe that year. If you're staying on top of that and estimating the amount of taxes that you owe, you're not going to be surprised by the time the tax season come around. So I feel like that's the most important thing to do is estimating your taxes so you'll know how much you'll have to pay throughout the year.
Very good. What are some things that individuals versus entrepreneurs should be thinking about when it comes to filing their taxes, if anything at all?
So the same thing as estimating their taxes. Also, it's important to know what credits you're eligible for. Don't go around listening to every person that's saying, oh, I got this much in a refund or I got that much. A lot of people or a few people qualify for credits and deductions. Just because one person qualifies for it does not mean you qualify for it. So if you do qualify for certain credits, like child care credits, if you're paying for daycare for your child, that's actually a deduction. So make sure when you file your taxes, you're getting all the business information, including the EIN and the amount you paid throughout the years for your tax return. But for individuals, it's just important to know your situation and as well as your filing status, whether you're single, married filing jointly, married filing separately, or head of household. That also makes a difference with your tax situation.
Good. So you're saying, what are the benefits? Because some people are like, oh, I can do it myself with all these softwares out there and apps out there and technology. Was like, oh, I can just do it myself. I don't need to pay a tax preparer. But what are the benefits of going to a tax preparer versus doing it yourself?
A tax preparer knows what to look for. I can actually look at a tax return. Just if you just handed me your tax return, I can actually tell you what income that you brought in, what credits I'm seeing on the tax return. It's something that I know at a glance. So that's my professional expertise. So if you're missing something on the tax return, I'm able to easily identify it so you're able to gather the information that you need. If you're filing it on your own and the software is telling you you did something wrong and you're like, I don't even know what the heck they talking about. You're more than likely you're just gonna find it because you just don't know. So that is the advantage of going to a tax preparer versus doing it on your own. I'm not saying there's anything wrong with doing it on your own, but you just got to know what it's talking about and what you're looking for.
And good point. Good point. I've had sometimes I have to scratch my head like, what is this? So how can a side hustle?
What are they asking you?
So how can a side hustle affect your taxes negatively or positively?
Well, when you're a self-employed person or you're operating a business, I actually hate the term side hustle. But if you're operating a business, it can affect you because most of the people aren't withholding taxes when they're making that income, and all your income combined gets added together, and that's what you're taxed on. If you're working for somebody, they're automatically taking out the taxes because they give you that form when you first get hired. They ask you how much taxes you want to take out. You fill that out. When you're running things on your own, you're not doing that. There's no one automatically taking out the taxes for you. So you have to be the person responsible for taking out. And that's where you have to estimate the taxes and how much you owe, because if you're not and you're adding it to your income when you file your taxes, it's a potential that you may owe. But if your business is taking a loss, it's a potential that it may help your income as well. So there's ups and downs on it, but you just have to know what you're getting into and your profits and your losses and everything like that goes with it.
So would you say those individuals that are doing Uber Eats and those ride shares, they really need to think of it as a business and say, hey, we need to take some money out? Like, what advice do you have for those individuals who may not say, I'm not really in a business, I'm just trying to make some extra cash on the side to pay my bills or pay down debt?
Those are the ones that's especially that needs to be looking at it as a business, because they are working as contractors, and at the end of the year they give you a 1099 NEC. That's saying that I'm paying you as a contractor to do this job, so you're responsible for withholding the taxes. I actually have clients that does Uber Eats and DoorDash and stuff, and they've told me that there's people that they work with that says they don't have to file taxes because on the form it doesn't have a withholding. So some people just don't know what 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 a 1099 is, and they think they don't have to do that, but you have to. So say you're making the DoorDash and the Uber Eats and you're making like $30,000 a year, that's going to get added to your income. And if you're not adding that, the IRS best believe they're going to add it for you, because those copies that you're getting, they getting those same copies. So you have to file your taxes, and you do have to think of yourself as a business. So just if you're out on the road and you're eating and you're not reimbursed for certain miles, and maybe you have to wear a certain special type of driving shoes, those are all eligible deductions. Those are business expenses that you can actually claim. And yes, you do need to be looking at it as, yes, you are a business, because you are in the business of delivering food for people.
That's I you know what? I thought about it. I always, because I know family members that does these things. I'm like, look, this is a business. I know you're not thinking of it as a business. It's a means to an end for you, but trust me, you need to think about it as such. So should we maintain a relationship with with our tax preparer all year round?
I recommend it. You shouldn't think about taxes once a year. That's when people come up with surprises. If you have a relationship with your tax preparer, you actually know the eligible deductions and stuff, things that might change. Say you started making more income, you didn't know how to handle that. Instead of you just ignoring it and just making new income, maybe you can reach out to your tax preparer and ask them how you should handle it. Anytime your financial situation or your life changes, you should be reaching out to your tax preparer and asking those questions. And a lot of us have these social media pages now. And well, what's funny? A lot of my clients don't even follow me on social media, and I'm giving out advice year round and things that can actually benefit them. But you should be following your tax preparer. If they have a social media page, you should be following them year round, because they're not just talking about taxes once a year. They're talking about it all year round. So you could be missing out on information. So those relationships with your tax preparer, whether it's a one-on-one or you're looking at social media, you should actually be keeping it year round.
Nice. What are some of the things you should think about if you have a cash business? Say, the hairdressers, the barbershop, those kind of businesses.
If you have a cash business, you should always be keeping receipts and logs of who paid you and the amounts. A lot of times you just see people get cash businesses and they have no way to track how much money they made. So if you're not tracking the amount of money you made and you're not giving your customers receipts, you don't know your profits and loss at the end of the year. You don't know if you're running a good, profitable business or if you're just living check to check. So if you're doing a cash business, it's equally important to keep track of your records. That's why I always recommend do some type of income-based app to give your customers receipts. There's Wave apps out there, Square, they do receipts as well. QuickBooks, they do receipts. Every time you accept cash from a customer, you should be giving them some type of receipt so you can be tracking that income. And you should be tracking your expenses as well.
Good point. I know I'm tracking a lot of expenses, especially, entrepreneurs who are in the beginning stages of their business. There's a few expenses, so you better keep track of those. So, what is your advice for those individuals who delicately work under the table, don't have to, right? But they do that. They take some little payment underneath the table. What's your advice and cautionary tale to those individuals?
If you're working under the table and you're not reporting your income, you want to think about your retirement. What's going to happen when you retire and you're no longer making money? It's going to play into your Social Security. It's going to play into your Medicare, even if you didn't do any retirement funds. So when you retire, you have to think about how are you going to continue to receive income while you're in this retirement stage, because they're going to give you based on what you reported. And if you're underreporting, you're not going to be eligible for stuff. For example, I have a client who was working under the table for years, and now she's retired and she's going through serious health issues. And she has to come up with this money out of the pocket because she doesn't qualify for the Social Security and the Medicare and stuff, because it looks like she never worked that much to qualify for all these benefits and stuff. So I think it's very important that if you're thinking about retirement and you have no way, maybe you're rich already and you don't care. But if you have no way to support yourself after retirement, that's something you want to think about.
Well said. Well said. Our tax preparers licensed CPA, and do you even need one? And when would you need one?
No, all tax preparers is not a licensed CPA. I'm not a licensed CPA. I actually have a degree in accounting, and I am a bookkeeper. So CPAs are really important if you have certain types of business structures. So most of corporations need a CPA because they file certain forms. Certain forms you can't file without a CPA. So it's very important that you know if you're eligible for certain taxes and certain things that you have to file, that whether or not it has to be done with a CPA. For LLCs and sole proprietors, you more than likely do not need a CPA unless it's a certain special circumstances, as well as a S corporation. When you have an S corporation, it's just important that the person understands the taxes and the forms that they're filing. But you really don't need a CPA. But if you are running a corporation, 9 times out of 10, you will need one.
Okay. So for tax purposes, what are some of the benefits or disadvantages of having an LLC versus an individual versus a corporation? Are there any, aside from the CPA requirement?
No, as a sole proprietor in an LLC, they're run the same exact way. So when it comes down to taxes, they're run the same exact way. So it doesn't matter if you're a sole proprietor or LLC when it comes to taxes. When it makes a difference is legally. So if you're going back and forth, deciding what type of business structure you have, I do recommend consulting with an attorney. A lot of people come to me thinking that it's a tax question, but it's really not. I seriously hate giving out advice of telling people what business structure to choose, because I don't want to run into the situation where they're blaming me because they're like, well, you told me I should be an LLC when they should have been a corporation. So I don't like getting all involved in that, but I can tell you the differences with taxes. Now, you can also have an LLC and run and file your taxes as an S corporation. So when you're doing that, what that means is you're doing taxes and then you're splitting the responsibility between shareholders. So you do the business taxes first, and then you split up the profits or the losses between the shareholders. And the other difference between an S corporation and an LLC, a sole proprietor, is LLC and a sole proprietor, you are not an employee, you're a contractor. So when you're running and you're taking money, that's the same as having a profit in your business. There's nowhere on the tax form to say you withheld money as an owner for yourself. That's counted as income. So you're going to be taxed on that money that you take out for yourself regardless. But when you're an S corporation, you're taxed as an employee. So you're working for a certain amount. Say you want to do 30,000. I don't know why I always use 30,000. That's my number, 30 and 50 and 100. Say you made just $30,000. You report you're actually an employee at the end of the year. You issue yourself a W-2. You report that on your tax return, and when you file the taxes as a business, you're actually withholding that $30,000. So that's a write-off under the business. So as a tax purpose, when people always ask me when should they do a S corporation, my number is if you are making a profit, a taxable profit. If you follow me on Tamara Knows Taxes, you know what I'm talking about. If you have a taxable profit of $50,000 or more, you might want to consider becoming an S corporation versus just being taxed as an LLC. So that's my differences and with LLC and S corporations.
But once again, that's a legal question that she says she is not, she is not that person. She's just here to do your taxes. So make sure you go get legal advice yes. for that. All right. Yes. Do that soon.
Yes.
Is there a difference in treatment tax-wise for consulting business versus those that sell products, an actual product?
No, not really. It's all a business. So the only difference,
physical product.
Yes, it's all a business. It's all income that you're making. The only difference you might see is in sales tax. So, different states operate sales tax differently. So Connecticut is some things, if you're running a service, some parts of your service may be taxable and some may not, as well as products. Most of the time, 9 times out of 10, the product is taxable, but you might go to another state where they don't have sales tax. So it's all based on sales tax. There's no difference when it comes to income tax or withholding. There's no difference whether it's a service or a product.
Hmm. Going back to individuals and entrepreneurs having their own business, I know a few people that get very happy with the owner's withdrawal. Can you say something towards that? When you're making a bit of money, you get excited, and those owners withdrawals are getting a little bit too much or too often. What do you have to say towards those individuals?
I don't, it's all, and if you work your numbers and you see that you can withhold, you can take it out, go ahead and take it out. But remember, if you're a LLC or you're a sole proprietor, you take that money out, that's not a write-off or a deduction. You're going to be taxed on that amount either way. But I feel like if you're going to take money out, you should be doing your accounting. You should be doing your monthly bookkeeping and seeing whether or not you can afford to be taking out that money. For my business, I did not take out money for the first couple of years because I can see my numbers and I wasn't making enough money for me to afford to take out. I knew I needed that to reinvest. Like tax season was going to come up. I need to afford to buy software. I need to buy paper to print these tax returns. So I'm just like, I wasn't really making a profit, but I knew that because I was looking at my numbers. So if you're not looking at your numbers and you're just taking out money blindly, I'm sorry for you because you don't even know what you're doing. You just doing stuff blindly. Really, really, you just don't know what you do. You just taking out money. You could be putting yourself in a worse situation than you can't even afford to pay your bills the next month. And you don't even know because you're just making the money. And you're like, oh, I got it. But you're basically putting yourself in a hole.
Keeping on that lane. Thank you for saying that. A lot of businesses, we don't think about budgeting like in our personal lives. And I talk to people about a lot. Budgeting, is it like one of the foundation of financial stability, budgeting, saving? Like, what advice do you have to people? I know you're a tax lady, but what advice do you have to give them, especially running your own business and seeing the growth in your business now?
My best advice is just to keep doing the bookkeeping and running the reports, running your profit and loss reports and your balance sheet reports. If you're doing the bookkeeping, you have bookkeeping software, you have access to run these reports. Look at your numbers and see what they're actually doing for you, and then have a plan for those numbers. Know that you're saying, oh, I'm making this amount. Then you're like, oh, I want to make more the next month. At least you have those numbers and you actually know how to adjust your business, as well as you can be paying an expense that you don't even need. For example, one of the things that I was paying for was like this automatic texting app for marketing. I wasn't even sending any clients text messages for this marketing app. So I shut it down because that was an expense that I didn't need. So when you're budgeting, look at your numbers and look at how you're spending money and how you're receiving money and adjust your business according to that.
Great advice. Especially if you're thinking about scaling, set those goals and know what it is that you're trying to achieve and then start working towards those.
Yeah, that's very important. That's very important.
For individuals who have rental properties, a lot of people want to build wealth and we think, that renting or going real estate route is the way to go. Is it necessary to put it in an LLC, or what kind of tax things should we think about when we're having all these properties?
So that is actually a legal question too. So whether or not you're putting in an LLC, it really doesn't matter. It will change how you do taxes a little bit differently. However, it's basically going to be the same how you report taxes. They're just reported, whether it's a business or it's an investment property, they're just reported on two different tax forms. But you still have the same eligible write-offs as if you were running a business. So there's really no difference. If you're thinking about it, I do recommend consulting an attorney, whether or not you should do that or not. But you should be doing the same things, keeping track of your income, whether or not what expenses that you're paying on the property, if you're coming out anything out of your pocket. You should be tracking all those things if you have a rental property, because rental properties is a business just like any other thing. So make sure you're just tracking everything as well.
So obviously, you have a lot of insight, right? Are privy to people and their tax return, being a tax preparer. So
I hope so.
Especially if you're a recurring client, you develop that relationship, or you might know their financial situation. Have you ever, just say, look, advise them to say, maybe, you should think about jumpstarting your savings, especially if they come and, they tell you their story, and advise them what to do that big return if they do get a big return?
Well, I do. So it's all in whether or not you want to pay the taxes throughout the year, or you want to pay it on your tax return. That's always the question. And I do find that a lot of my clients can't afford to pay the taxes throughout the year because, they have a life to live. So it's just, you have to always think about that question is, when do you want to pay the taxes? Do you want to pay them now, or you want to pay them later? I do see some things with certain clients. I never discourage anybody to not donate or go to church or anything, but I have clients where I can see where the amount of taxes they owe is the same amount of tithes that they pay throughout the year. And I say, well, and then when they have to owe that amount of taxes, and I'm like, well, you can adjust it a little bit, because if you're crying about the taxes, but you're willingly giving out this money throughout the year, maybe you want to reconsider and adjust the amount you go. But like I said, I never discourage anybody to donate or give tithes or anything. But it's just like when you're running into these situations, you have to think about yourself sometimes, because the IRS wants their money regardless. So they're not going to wait. They don't care about your story or anything. So I do see some things and I say, maybe you want to adjust this. But like I said, some of those things are touchy subjects, especially when it comes to individuals. They're touchy subjects. So, you give them advice, and what they do with it is what they do with it.
Can you claim your tithes? Because, usually at church, our church that I used to go to, they give you your total tally of tithes they give for the year. And they give you a sheet of paper, say, here, this is the amount of tithes you give for the year cumulative. Mm-hmm. Can you claim your tithes on your taxes?
So you can, but it's very different than how it was when I first started doing taxes. So back in the day, or I'd say back in the day, so a couple of years ago, I think it was before Trump came in office, everybody you can either itemize or you had a standard deduction. So you remember you used to always hear everybody talking about itemizing and stuff. That kind of went away. It didn't go away, but it adjusted the amount of people who's actually able to itemize right now. And your tithes was one of the things that actually boosted your itemized deduction. So you were able to claim it, and it was visible on your tax return. Since then, it's changed a little bit. So some have, you can claim up to $250. They did that around the COVID time, and then other times it was $100. So every year it's been changing since then. But things that you're eligible for, you're always eligible to claim it. You never know. So I always say, if you have someone that's doing your taxes and you know that you can possibly claim it, bring it to your tax preparer. They'll tell you whether or not it's if you can claim it or not. But tithes is something that you can report on your tax return. However, whether or not it's going to make a difference, it's always questionable. It's different every tax return.
Hey, it's a big chunk. 1/10 is a big chunk, especially if you're bringing in a good salary. It's some people do gross instead of net, so it can be impactful.
Yeah.
So
yeah, like I said, a couple of years ago it made sense, but not so much anymore.
So a lot of people,
but still bring it.
Mm, mm. So, as a financial coach, I always tell people when, especially if they're struggling, if they're in debt or they have no savings, I say, if you're getting a tax return, just think about jumpstarting your savings and, start jumpstarting paying off those debts. Cause some people get good tax returns. Some people, I know, advice and take with a grain of salt. But do you see situations like that where people are like, oh, I'm so excited. And then they're like, I'm going to go spend. I'm like, oh, maybe not.
Well, yeah, what you do with your tax return is none of my business. So I do not. I do not give them any advice on how they should spend their tax return. I know some people are looking forward. I know some people need it. What you do is not none of my business. But I will, if you not get a refund that you're satisfied with, I will give you advice on how to get a refund. However, it comes back to that question: do you want to pay taxes now, or do you want to pay it later? Because a refund is you pay taxes throughout the year, and if you overpay, you get a refund. That's what a refund is.
Yep, you overpaying the government. So, any final words, Tamara? Any final words to actually, no, back it up. Documents. I didn't think we were very clear.
Yep.
Tell us some documents that we need to have. We must have to get ourselves prepared for the season.
So if you run into business, you need your profit and loss and your balance statements, because those show the expenses and the income that you made throughout the year. If you are an individual, in all people that's filing taxes, if you're going to prepare, make sure you have your updated Social Security number, your Social Security card, date of birth of everybody that's on your tax returns, correct spellings of your name. If you are a junior, senior, the third, make sure you are telling that to your tax preparer. Also, if you are doing direct deposit, make sure you have your routing number. What's so funny is a lot of the younger generation, they're not used to checks. So they don't know what a routing number is. So if you're watching this and you don't know what a routing number on your account number is, please look it up so you'll have that as well as your account number. Your account number is not your debit card number. It is your bank number. So if you don't know that either, do not pull out your debit card and look for it. Look it up online or call your bank to find out what your account number is. Credits, like I said, if you're looking for the credit, figure out what you need for it. If it's like the dependent child credit, make sure you have the EIN number for the daycare that your child is going to, as well as their address. If it's an individual that's taking care of your child, make sure that you have the person's Social Security number in order to claim that credit. There's so much stuff that I can go into, but like I said, if you know you're eligible for a credit, make sure you have everything that you need that you're eligible for, and look at your last year tax return and see what you actually claimed, because there's a good chance what you were able to claim last year, you're also able to claim this year. So any documentation that your tax preparer asked you for last year, make sure you have that with you this year. Because that'll make the process so much smoother. Just prepare. I always say over prepare. I love my clients that give me these thick binders every year. It drives me crazy, but I'm like, you know what? At least I have time to go through it and look for everything that I need. So over prepare when you do your taxes. Okay. And make sure you have all your statements. If you're working for somebody, how you have Social Security or you get retirement, make sure you have all your tax statements before you actually file. Because if you don't and you file, you're going to have to do an amendment and refile all over again. And that's just a hassle you don't want to deal with.
Yeah. So basically, documents is what cause people to be delayed, right? Those are the top reason that taxes are delayed or cause people to have a delay in filing their taxes.
Yes. If you, some are you didn't report all your income, so you're missing forms that you filed maybe your bank account information on the tax return is wrong. So always make sure that you're looking at your routing and your account number, because that can delay your tax return. If it's your first time claiming a dependent, they might do an extra verification check. So if you get this letter in the mail saying, we see that you claiming a dependent, can you just bring us this extra proof? Please don't freak out. Just send them the extra proof that they're looking for, because once they receive it, they'll release your refund. So those are the things that you should be looking for.
Awesome. So any final word of wisdom before we go for individuals or entrepreneurs? Any final words?
Just don't be scared of taxes. I know it's not a sexy topic, but don't be scared of topics. There are people that's down to earth. I feel like I'm down to earth, but there's people that's down to earth that will talk to you just like you talk to your homegirl or your homie every day about taxes. And I am one of those people. I try to make it comfortable. So just, follow me on social media. I'm always giving out that free advice that you need. So if you're scared to ask, I might just talk about it. And the question that you didn't know that you need answered, I might have talked about it already. So that's my final words. Tamara Knows Taxes. Now you know what to do.
So you can find Tamara at Tamara Knows Taxes. That's our handle on Instagram. And do you have a website as well?
Yep, TamaraKnowsTaxes.com.
Hey, across the board. There you go. Well, thank you so much for dropping your knowledge.
All across the board. It's consistent.
Thank you so much for dropping your knowledge here at Alec Buddy 365. And I'm sure I'll have you on again, because I'm sure I'm going to be one of those people that, I should have asked that question. But until next time, remember, keep your money Irish. Wait. Hold on there. My beautiful people, don't forget to hit that subscribe button and tap that notification bell. We are here every second and fourth Sunday of the month. Also, the information for our guests can be found in the show notes. So what are you waiting for? Wanna subscribe?